Hello, this is Matt on the Moon Lambo channel. So, how about these recent developments in the world of fintech? What does this mean for XRP? How is it going to be an integral part of this? Well, I'm going to run through this with you. It's a fascinating piece with a number of points worth bringing up, along with this one from Daily Hodl. Central bank digital currencies could be next step in evolution of money, BIS reports, which is the Bank for International Settlements. And this article goes on to cite, and it's a quote from somebody, about how central bank digital currencies can effectively offer instant settlement. Kind of like just transacting with cash from person to person or person to business. There's no middleman necessary there. So if that's the case, what are we doing with this whole XRP thing? Well, I will share with you the answer, and fear not, central bank digital currencies flat out cannot do what a decentralized cryptocurrency with an open market value such as XRP is capable of doing. But before we go any further, if you would please delicately tap the like button, I would appreciate it. It's good for the Moon Lambo channel. And also go ahead and subscribe to the Moon Lambo channel, lest you leave yourself yearning. Because I'm telling you, this channel is the best channel on all of the YouTubes, and there is science behind that, I assure you. So let's jump in out of this one from Cointelegraph, again titled, What Recent Developments in the Fintech Space Mean for Our Future. The fintech industry has been changing rapidly, dare I say, X-rapidly? Digital assets, distributed ledger technology, and central bank digital currencies are gaining momentum. Multi-trillion-dollar United States Federal Reserve System money creation has increased demand for digital assets, particularly in Bitcoin. Well, yeah, that's more of a concept. If there is hard data on it, show it to me. Where because of all the extra money printing, there's all sorts of excess funds flowing in. There may be some truth anecdotally or to a small degree of money flowing in through, for instance, all of these stimulus checks that have come out thanks to the pandemic flowing into crypto. I've seen anecdotal incidents of that, but is it happening in any sort of meaningful way? Are people hedging against the United States dollar because of this? Well, that would be fascinating, and I would welcome anybody sharing that data with me. I'm just sharing with you that I haven't specifically seen that to this point. It seems more like a fun narrative that people in crypto media would want to point out. But if there is truth to it, I would certainly want to know. But banks, brokers, commercial lenders, investment advisors, private investment funds, family offices, mutual funds, fintech entrepreneurs, lawmakers, and private citizens should take note of several developments in this space. And this next part got my attention here. They're parsing out the differences, sort of. I wish they'd parse it out more. They're more like they're making a claim without sufficient parsing, but they're talking about the differences between DLT, distributed ledger technology, and blockchain technology. So check this out. I'm not sure if I buy this. You tell me if you do. But the use of ledgers to track events and transactions is an ancient origin. DLT and blockchain technology combine venerable record-keeping techniques with new technologies like storing old wine in new bottles. A primary goal of DLT is the creation of records with entries that must be verified by several distributed parties in close to real time, making forgery much harder to achieve. And check, here's the interesting part to me. No trusted intermediary is needed. DLT and blockchain technology differ in some respects. Tell me more. For instance, blockchain technology is generally permissionless or public, whereas DLT is generally permissioned and not publicly accessible. Okay, so I'll buy the fact that you can't always use those words interchangeably, like DLT and blockchain. But it is the case, for instance, with XRP, that it's a decentralized cryptocurrency utilizing blockchain technology, and it's distributed, distributed ledger technology. So you could describe XRP as both, and XRP is permissionless. That is, you don't need permission from a central authority to utilize XRP or access the ledger. And so if it's the case, because here's what they say, check this out. They write, for instance, blockchain technology is generally permissionless or public, whereas DLT is generally permissioned and not publicly accessible. I haven't seen this point made before. I'm not sure that I'm sold on this point either. If there's data to back that up, then super duper. But most of the time when people are talking about distributed ledger technology, what I've seen, and I know it doesn't have to exclusively apply to this, but from what I've seen, they're typically referring to decentralized cryptocurrencies. And so, again, I understand it cannot be used interchangeably. It's not going to be applicable in every case, but it certainly is, as I just cited in the case of XRP. It is blockchain technology and distributed ledger technology. But Bitcoin and other digital assets, as with gold and other commodities, are goods to which people ascribe value in market transactions. Unlike gold, however, one can send or receive digital assets to or from anyone, anywhere in the world, instantaneously. The demand for digital assets such as Bitcoin and CBDCs, which of course are central bank digital currencies, including US digital dollars, reflects the changing need and desires of computer-savvy participants in the 21st century economy. Only some banks have accounts with the Fed, and digital dollars have the potential to change that by allowing or perhaps requiring companies and individuals to open and maintain Fed accounts. Now, that would be an interesting departure here. No, we're going to get to the part in short order about instant settlement with bank currencies. But before I do, because I don't want to cover this whole article, it's too long, and not all of it was that interesting. I just wanted to cover the parts that I thought was. Jumping down to here, though, they have this little subheading, Uses and Benefits of Digital Assets. And I'm just going to read up, rather than describe everything in great detail as it's covered in this article, I just want to name some of them. So here are the uses and benefits of digital assets. And they're talking about digital dollars here and central bank digital currencies in general, talking about, in terms of what could it do, starting with fraud and corruption prevention. And there's certainly truth to that. I mean, think about it. It's easier to track than cash, right? If there's a central party, say it's a U.S. dollar, digital dollar, and it's the federal government in charge of that, they'd certainly be able to track where everything goes, the entire history for every digital dollar. So that would be something. Of course, if they're still printing actual paper cash, then it's not like you're preventing the problem of, people using the United States dollar for illicit purposes, but still, it's a good thing. Also, there's data benefits, efforts to minimize inflation, international trade, bribery and corruption, and that falls in line with this, just using money in general for nefarious purposes, and then cybercrime. And in this article, it was interesting to me, they didn't really say anything about settlement, but if you jump over to this one, which is titled Central Bank Digital Currencies Could Be Next Step in Evolution of Money, BIS reports, they do start talking about that, so check this out. The Bank for International Settlement, BIS, says central bank digital currencies, which are new forms of digital fiat guaranteed by governments, could be the future of money. In a new annual economic report, the BIS reveals that central banks are well positioned to trigger innovative changes in the current payments infrastructure, and here's a quote. Technology, in particular in the field of digital currency, opens up opportunities for payment systems. CBDCs combine this innovative technology with the tried and tested foundation of central banks. It is the central bank's choice to harness these forces for the common good. They can combine their role as catalysts, overseers, and operators and develop an entirely new set of payment arrangements that run on digital currencies. Now that part, totally cool with. That makes sense, right? CBDCs may be based on blockchain technology, which powers cryptocurrencies to create digital versions of traditional fiat money. Certainly true, it can be blockchain technology, but of course, if you're talking about central bank digital currencies, these would be permissioned, which is a key point. These central bank digital currencies, they're not going to have some sort of open market value. You're not going to be speculating on the United States dollar on Binance US anytime soon, for example. Just saying here. But anyway, it continues. They have been compared to stablecoins and are designed to enable quick and easy domestic and cross-border transactions 24 hours a day. Okay, so United States dollar is always worth the United States dollar. By the way, fun fact, 1 XRP is always worth 1 XRP. Now, the report also highlights the pros and cons of adopting central bank digital currencies, and here's another quote, and this is the part that I think is probably most interesting in this here. Such an innovation would provide general users with direct access to central bank money and potentially offer a safe, reliable, and universally accessible settlement instrument. Ooh, settlement, tell me more. We're going to be supposed to be using XRP for settlement. Talking about central bank digital currencies, but anyway, you're talking about using it as a settlement instrument just as cash does now. The benefits would have to be carefully weighed against the implications for the functioning of the financial system, such as the risk of disintermediation, including accelerating bank runs at times of stress, and potentially a larger central bank footprint in the financial system. And so when you're talking about a central bank digital currency being used for settlement, it's really in the context of what I'm covering right here. Whereas just like with paper cash today, you have instant settlement, whether you hand somebody a cash and they give you whatever a product is. I don't know, maybe you're buying a package of Oscar Mayer bologna from your friend. You just give them the money and you got your bologna, you're on your way. That's a good transaction. Or maybe you're buying that same Oscar Mayer bologna. Maybe it's like a family size pack and you're buying that at your local Walmart with all the other people of Walmart that are hanging there, so you can have a good time doing that. And just using cash, there's really no friction there, right? It's just that there's the transaction and it's done. So they're talking about making it as easy to do that. And maybe some people would feel less inclined to use credit cards. Those aren't going to go away, though. That's a whole different topic for a different day. Credit cards aren't going away. I certainly don't believe that for a moment here. Maybe you could use this in place of your debit card or something like that if it's easier and there's less friction involved. Maybe you don't need that middleman right there. And that could make sense to me, right? Because there's a cost of doing business if you're a bank to run those, and there's reasons that they do it. But anyway, that's also outside it's conceptual outside of what I wanted to cover here today. But so what's going on here? So for settlement, sure, it makes sense if you're talking about transacting in a case where there's no need for conversion, but that settlement is different when you're talking about utilizing a bridge currency like XRP, when you're talking about transacting, changing one fiat currency to another. When you're just talking about buying that family pack of Oscar Mayer bologna, not a big deal. There's no need to throw XRP in the middle of that. Let's not complicate this bologna transaction, all right? That would be a bunch of baloney. We don't need to do that. And so it's to be used specifically, in the way that Ripple's position anyway, as a bridge currency. That is not something that a central bank digital currency can do because it is a walled garden situation. And so as this adoption of central bank digital currencies speeds up, and I certainly suspect it will, that's a hunch that I have, there will just be an ever-increasing need as more money flows around the world and micropayments become a thing. More money is going to flow. There's going to be more of a need for bridge, and XRP is going to be able to take care of that. No other cryptocurrency is being positioned for this. And you do need to have a decentralized cryptocurrency with an open market value to actually make this possible. It cannot be backed by something. Otherwise, you have not eliminated the primary problem here, a primary problem at least, which is trust. It's not just the technological advantages that blockchain brings. It's not just the speediness of it. It's not just the fact that a transaction costs fractions of a penny. Those are all great things, and that needs to be a reality, and it is, or else you can't make this happen. But trust is a real thing. And it's basically a non-technological factor that people don't comprehend when they think that a central bank digital currency is going to be taking the place of what Ripple is positioning XRP to do. Just flat out, it's not going to happen. There's no way. Counterparty risk is a real thing when you're talking about that. So anyway, fun to kind of think through this stuff just from a critical perspective. But that is it for this video. Let me know what you think below. How do you feel about Oscar Mayer bologna? Or maybe you're a Hunter bologna man. Tell me what your brand is below. I'm not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!